Hey everybody, how are you? Hope you're doing well. So today we're going to talk about four assets to buy and never sell. All right. And so let's start out with number one. Number one. So index funds and ETFs, index funds and ETFs. So it's pretty important to be investing in the stock market. Why? This is to get in on the compound interest. So your money is growing without you actually doing anything. So getting in on that is early is important. However, if you're getting in on late and getting in there late, you can still get to a very, very good number, um, like a 10-year time frame or a 15-year time frame. So if you're getting in late and you have a good 10 years, you can still create millions within that 10-year time period, even if you are getting in there late. So index funds and ETFs, some examples, not financial advice, but just some examples. VTSAX, VTI, VOO, VGT, SPY. These are just some examples. Index funds and ETFs. So that is the number one asset to buy and to never sell. Why? Because you are letting it compound, letting it compound. Number two, so we have our individual stocks. Individual stocks are more riskier. As you know, if the company were to go bankrupt, then you would lose all your money. So that's why individual stocks are risky. However, the higher the risk, the higher the reward. So individual stocks, they grow way faster than using the index funds and the ETFs. So generally, people, diversify. All right. They don't have all their money in one place. So diversifying. All right. So as far as the individual stocks, we have our blue chip stocks, such as the companies around you that you are familiar with, like the Coca-Colas, the McDonald's, the JP Morgan Chase. So very solid companies that have been around for decades. Those are examples of the blue chip stocks. We have the AI stocks, NVIDIA, Palantir, for example. Palantir is interesting because they are connected with ICE. Um, to be more specific, Homeland Security. So they actually have a contract with the government. So some people would see that as um, negative, and some people would see that as positive. But I just think it's interesting that when you look at the stocks and you look at what kind of businesses they are and who they're connected with, Palantir is connected with the whole immigration thing that is going on, right? So we got our AI stocks. So there are a whole bunch of different types of individual stocks. You can go into healthcare with the actual pharmaceutical companies. As you know, GLP-1 is big right now. Um, all the weight loss drugs is big right now. Um, so the makers of the drugs, so we can get into healthcare. When it comes to stocks, we can get into electricity, Emerson Electric, for example. So we have individual stocks. All right, so that is number two. Number three, we have real estate. So you're very familiar with real estate. This is important for your long-term wealth. So it is slow in building wealth, and it is also um, the most stable when it comes to building wealth because it's a real asset that you can see and touch. Um, you don't have to think about volatility. You don't have to think about it going up and down like the stock market goes up and down. So you are building wealth through appreciation. with real estate. This is long-term wealth. You get monthly cash flow. You get tax advantages such as depreciation. It is a hedge against inflation because your rents are going up. Also, you can leave it as an inheritance to your children if you have children. Um, Real estate is not all positive, though. However, you do have to think about some of the mishaps that happen with real estate, and one of those would be vacancy. Having a vacant property. So when the property is vacant, you are the one that is responsible for paying that rent. And so, in order to protect yourself, having reserves is important when you're getting into real estate. And then also buying the multifamily as opposed to single family. So when that one person moves out, you're not devastated because you have a whole bunch of other tenants, if you see what I mean. All right. So you have real estate. So that is very important when it comes to building wealth. It's a real asset that you can see, touch. It is building wealth through appreciation. Also, you have your equity that you can leverage at any time, or you can choose to keep there. So we say buy real estate and never sell it. However, there is a cheat code out here that comes with real estate, and that is the live in flip. In particular, people who are starting late may be interested in the live in flip. So, what you do is you get in there and you live in it for about 2 years, and then you flip it. All right. So, you can get huge amounts of cash by doing that. The reason why you would stay in there for 2 years is so that you can not pay the capital gains tax. So that's one of the rules. One of the rules is that you have to live in it for a certain amount of years. All right. So there's the live and flip, which is a cheat code, especially if you are getting into this game late. So by doing that, you could be making hundreds and thousands of dollars by flipping. So you get into a property by paying a down payment. Let's say a 3% down payment. You're living in it, 3% down payment. So let's do an estimate. So let's say you're going to get $180,000 house, right? So you get it for 3%. Somebody want to do 3% times 180,000 for me? So I don't have my calculator with me, but that comes out to like $6,000 or something. So you can get into a house with 3%. And then stay there 2 years. So the house appreciates. So when you get ready to sell it, it's going to be worth more than 186,000. Right? This is just an example. It's going to be more than 186,000. So when you sell it, you're selling it for more than the 6,000 that you paid to get into it. You're selling it, let's say 2 years later, let's just make up a number. Let's say it's worth 200,000. All right. Homes usually appreciate 3% per year, but people have been seeing record high appreciations, like outrageous appreciations, because of what's been going on with inflation. Like some people have been seeing 20% increases, just abnormal increases happening because of inflation. But let's say that the house is going to be worth 200,000. All right. So you're going to sell this $200,000 house, and you don't get the whole 200,000 because you have to pay your real estate agent. So you're going to pay about 6% commission, and then you're going to pay closing costs. Let's estimate about 3% closing costs. So that'd be about 9%. Then any repairs that you have, Maybe you need to fix the house up. Maybe that may be 5,000. So take 10% of that 200,000. And I'm just estimating here. Take 10% of that 200,000. So that's what you have to pay. And so you're going to walk away with 190,000. So you bought the house for 6,000. You're going to walk away with 190,000. And that's an example of a live-in flip, and that would be advantageous to someone who is getting into this game late. So that is out here, that is available. That is a cheat code that is out here that is available, and that is the live-in flip. Okay. But as far as assets to buy and never sell, we have our index funds and ETFs. We have our individual stocks. We have our real estate. And then lastly is going to be a business. So adding a business into this mix is important. So some people would choose to do it. Other people have no interest in doing it. A business is important because it's going to add more income to your current situation. So most businesses are built from the ground up, especially if you are not starting with a lot of reserves. And then after you build your business up and you have reserves, then you start buying businesses, right? That's the route that some people take. Other people would just go buy a business from the jump. All right, depending on how much capital you have, how much access to capital you have. But the component of adding a business would be important. All right. And that's any business that is going to generate income, preferably something that you are interested in, or if you're just looking for something that's profitable, looking for a profitable business, something to build from the ground up and then go into buying the businesses. So buying businesses, they generally cost like you generally have to have a lot of capital to buy businesses, or you could go the seller financing route, or you could go the loan route. All right. But either way, you would have to either have a lot of capital or be willing to borrow capital or use the seller financing route. All right. And then that is branching off into these different businesses, like storage facilities, for example, car washes, laundromats. Some people buy businesses that are already profiting off of the internet. Some people buy e-commerce businesses or software businesses. So there's a variety of different things that you could choose from. But most people don't start from that point. Everybody is starting from different points. But the most important thing is that you start. All right. So those are the 4 assets to buy and never sell to improve your financial situation. Once again, we have index funds and ETFs. We have individual stocks. We have real estate. And we have a business of some sort. All right. So do me a favor, if you like the channel, I need you to hit that like button. If you're not a subscriber, I need you to do me a favor, hit that subscribe button and notification bell next to it so that you will not miss the episode. And if you're interested in improving your finances, check out the free newsletter below. Thank you for watching, and I will see you on the next video.